Good afternoon, ladies and gentlemen. Welcome to the last 1 hour wheel of market today, where we take you through the closing 60 minutes of trade, and it's turning out to be one of the best days that people have seen in October. The most recent low that was made on October 7th by the Nifty, which is 24,694, was tested very early in the morning. The index went substantially below that, which is 24,575, and then we see the classic long tail pattern. 3 successive days of falls is what the bulls had enough, and then you start this process of a very strong reversal. 24,883 for you, ladies and gentlemen. The index is up 133 points at the day's high, but the story is a little bit deeper. You have a very sharp spike from a low of 24,575, which essentially means that the bulls have had enough in terms of being on the back foot, and now at these levels, not only do you see a very serious bout of short covering ahead of the weekend, you also see a very sharp buying momentum coming in a market that has corrected more than 1,500 points from its peak of 26,250. So from today's low, which is 24,575, the run up is still 882. There's a clear 300 point pullback that the Nifty has seen, and on the 75-minute chart I will have something to show for you, which is the long tail, a deep low in the market from which there is a rapid recovery, and you have that one single candle which is just a very slim line representing a long tail. We'll show that chart to you a little later, but the winners of the trade today are no less than Axis Bank. A series of good earnings from Axis Bank is what prompted the index to show a lot of strength. Axis Bank is up 5.8%. This is the top gaining index stock as far as the market is concerned. ICICI Bank again bottom fishing here, 2.5% higher, 1262, and HDFC Bank about a percentage point higher on the Nifty, plus 1.2% uptick on State Bank of India. If you look at the Bank Nifty, ladies and gentlemen, this is an equally strong gap up that has now happened. 859 points higher on Nifty Bank, 52,157, and the day's low on the Nifty Bank in the first 10-15 minutes of trade was something like 51,000. So from 51,000 to 52,150, it has been a 1250 point uptick on Nifty Bank. Apart from these two, the advanced decline ratio is fairly stable now, 1:1. Remember, in the morning it was at 1:4. We tracked 19 indices for you, ladies and gentlemen. Out of 19, 17 of them are in the green. The rally is led by Nifty Metals Index, Nifty Bank Index, Nifty Fin Services Index, the PSU Banking Index, and all that could go right in the mid cap index and the small cap index is all fine. So we have had this very strong pain point over the last 13 sessions in October, where you've seen nothing but selling, and today is a day where you see some kind of a recovery. This is as good a time as any to speak to our guest, Mr. Amar Singh from Angel Broking. Let's see whether we have Amar on the show. Yes, Amar Singh, Senior Vice President for Research at Angel One, is with us. Namaste, Amarji, and a very warm welcome. Finally, there are smiles across the Lal Street after very troublesome 13 sessions on the Nifty and the Nifty Bank. How are you reading this change in sentiment? Is the worst behind us?
I would say that given the way the markets have corrected, it clearly shows that there is a lot of selling pressure which was there, and we have to remember that we are in a secular bull market. There's no doubt about it, and there would be such bouts of corrections which again are healthy and good, because that gives the opportunity for re-entry in many of the stocks which would otherwise would not have been possible. And also the if you look at the triggers which have been which have really led to this correction, basically there are two of them. One is that expectations that a lot of money would flow into China because of the rapid the spectacular rally in the Chinese markets. That's one, and secondly, the Middle East crisis, whether if it extends further or maybe engulfs Iran and other countries directly. So those were the concerns, but they seem to have been dissipated to a very great extent. So I think that's what is really helping the markets, and the markets are not spooked, because if you look at the way the India VIX corrected I would say increased, despite the market correction wasn't very significant. So that clearly gave a very, I would say, giveaway signal that we are not seeing a very sustained selling pressure. Having said that, I would still say that it is too early to say that we have seen a short-term bottom being made, because till the time we don't see Nifty sustaining above the 25,200, 25,300 zone, that's a very important zone of resistance. And also, if you look at some of the technical parameters from a short-term perspective, they continue to be extremely negative. And one of the parameter is it is quite negative. So we could also say that we are witnessing some sort of short covering. And yes, as you rightly said, we've got some strong momentum coming in from the banks, Axis Bank, ICICI Bank, and SBI. And we've seen some good move in Wipro as well. So they are definitely helping the index. We've seen some broad-based rally across the indices. But I would say it's still too early. On the downside, yes, today's low is something that definitely needs to be watched out for. And we've been very clear that 24,700, 24,800, that's a very strong support zone. Whereas on the upside, 25,200 to 25,300, that's a very strong resistance zone. So we could witness some consolidation between this zone, okay, and some sort of I would say tussle between the bulls and the bears. So one needs to be slightly cautious, definitely.
Okay, that's a fair point. Even within traders, there are different categories. I'll request the PCR to fire the daily chart of the Nifty and the 75-minute chart that I had requested. Remember, the most aggressive ones of them always hunt for bottoms, and they seem to have found one today at 24,575. The sensible and the traditional traders on the long side will come when the index, if at all, crosses 25,200. But for the moment, it's the aggression and the momentum play that is doing wonderfully well. If you look at the 75-minute chart on the Nifty, this is the long tail that I was talking about, that in the first 1 hour, 60 minutes of the trade, the market bottomed out, and for the last 3 hours, every single 75-minute candle has a higher high and a higher low. At the moment, it is hit a resistance at about 24,890, which is the 24,900 call writer, which is now acting up. Let us see whether it goes above or not. But a close above 24,900 is appreciable, and any close above 24,800 would be very welcome. Let's also look at a couple of stocks that have changed tunes. Look at Wipro. The market actually fell yesterday because of terrible numbers and commentary from Bajaj Auto, Havells India, and of course Nestle. And today the market is reversed thanks to the 1:1 bonus that Wipro has announced. The counter is up 4.4%, 551 for you. 1,800 crores worth of shares have been traded. A very strong show by Axis Bank in terms of quarterly earnings, 5.6% higher, 1195. 2,000 crores worth of transactions that have been traded. And of course, the third one being a combination of large caps such as ICICI Bank, HDFC Bank. HDFC Bank and Kotak Bank report tomorrow. So it's basically the banking sector that has saved the day for the Nifty. Let's get back to Amar and try and get a sense of a list that he has, which he's watching. Amarji, anything that catches your fancy or is on your radar as far as initiating an additional buy or a fresh buy that the research team may have come up with in large caps, mid caps and small caps?
So I would say banking space, definitely we've been positive on Axis Bank for some time, and also on SBI and ICICI Bank. So these couple of I would say trades which one can definitely look at. So I'll just first talk about Axis Bank. So if you look at Axis Bank, what we are seeing is that from a medium-term perspective, the stock has been in for consolidation and then witness some correction. But from a long-term perspective, still remains strong and positive. So sustaining above the 1200 and 1220 zone, the stock has a potential to rally towards 1270, 1280. And if I look at, for the matter, ICICI Bank is also bounced back today, but we'll have to see whether it's able to hold on to those levels, because a level for ICICI Bank on the upside towards 1280, that should act as a zone of resistance, but sustaining over that level, we could witness some upside move there as well. So these are two stocks, and also if you look at Mazgaon Docks, so this is one stock which had corrected, has bottomed out.
Yes.
And is in for some up move. Only the stock needs to now sustain above the, it's currently around 45.20 odd or so. So sustaining above 45.50, 4600 level, we could witness a sharp move in the stock towards the 4800, 4900 levels, because it seems that the stock has formed a very strong base with strong support below the 4200 level.
Absolutely. Two stocks and both of them in top form today. Axis Bank post its earnings has had a time correction and that seems to be getting triggered in terms of a higher price following the strong set of earnings. And Mazgaon Dock, which is the top traded counter, in fact early morning Mazgaon was up 9%, now up 6.8%. And the volumes are phenomenal. You have 3,500 crores worth of Mazgaon being traded, and the most immediate high that was seen 3 months ago was somewhere like 5,500, 5,700. So a nice steep correction, and now perhaps a consolidating upward move. Sakshi is with us. Over to you.
Good afternoon, Shreya, and good afternoon, Amar. Good to be speaking to you, and at a time when the markets have recovered from the morning lows for sure, 111 points higher. This is such a breath of fresh air. After the entire week, we have been seeing extremely dull moves on the markets, struggling to find some names that we can talk about on air. But finally, it seems that, good times may be ahead of us. Festive cheer may finally be, sprinkling some joy on the markets too. Amma, your sense, do you think we've made the bottom that we had to?
I would say that today's move definitely is a positive move, but I wouldn't really bet on that we made a bottom. For the simple reason is that I've spoken earlier too, that some of the short-term indicators on the benchmark index, they are very negative. I'm talking about the Nifty. And so if I look at Bank Nifty has a slightly better perspective as compared to Nifty. So if the next, I would say, rallies to materialize, banking stocks might see some up move. So we need to keep a close watch on the major heavyweights like HDFC Bank, ICICI Bank, Axis, Kotak. So these 3-4 banks, and to a certain extent SBI, how they really perform, because that could to a certain extent define the way index Nifty moves. One good aspect is that we've seen some positive momentum coming in the IT space, so that whether that sustains is something that needs to be done. So I'll say that we could witness some choppy trading sessions, some range bound session in the index, and till the time we don't see it reaching the 25,200, 300 on a sustained basis, on a consistent basis, we could say that yes, we are witnessing some consolidation, and yes, 25,700, the recent low, almost towards that. That should act as a very strong support. Breaching 25,700 could be a cause of concern. If it sustains below that level, then we could witness some sharp move towards 24,300 levels or so, if 24,700 is breached.
Right. So private banks, as you both were just discussing, Axis Bank, that's taken the front row today, 2% higher now, the private banking index that's pulled up the Nifty from the lows for sure. Axis Bank is now up almost 5.5, closer to 6% higher in trade. ICICI Bank is another one that's nearly 3% up, supporting the sentiments right now. Apart from this, it's Wipro from the IT pack that's definitely up and about after earnings, 4.5% higher. You have even some of the metal pack shining bright today, 1.6% higher for the index on the metal space particularly. Hindalco is among the top performers as far as the Nifty gainers are concerned. Within F&O, it's Jindal Steel and Power that's also making sharp moves of 4% uptick. NMDC, Nalco, Tata Steel, Vedanta, Ratnamani Metals, they are all in fine fettle today. Amarji, metal space, how are you assessing? Is a structural move underway?
So if you look at the metal space, we've seen some pullback. First, I'll talk about Vedanta. So Vedanta had witnessed some correction and then again witnessing some pullback today. So whether it's going to sustain, we'll have to watch out for, because 500, 510 is going to act as a key zone of resistance on the upside. Looking at the other metal space, like for example Tata Steel. So Tata Steel, we are seeing it's a clear case of consolidation. Higher levels will be sold into. I've talked about the levels earlier. It's around 150, 170 range for Tata Steel. And if I look at another metal big player, Hindalco. So Hindalco is on a different trajectory altogether. What we see is that here the trend is definitely strong and positive. Upside, we could see the rally towards 770, 780, which was its recent highs. All-time highs. On the downside seems to be capped around the 700. So 770 with a positive bias where Hindalco is moving. And lastly, if I talk about a public undertaking, SAIL. So SAIL is more or less again consolidating. It's like Tata Steel. It's in a very narrow range, 120 on the downside and 140 on the upside. So some of the metal stocks are clearly, there's no trend. Hindalco definitely appears better as compared to most of the other metal stocks.
Fair point. Let's look at record highs in a market which is also now healing. Let's use the word healing. Okay, and no surprises there that a large number of record highs are from the capital markets space. We'll start with Motilal Oswal Financial Services. Today, 11% higher, 1031. From the same space, we have Anand Rathi Wealth Management. The management was with us about a week ago discussing their second quarter performance, where sales and profit for the second quarter rose 33% each, 5.4% higher, almost 4300. Exchange MCX 3.5% higher, 6564. And of course, from the metal space, there is National Aluminium and Torrent Power bringing up the electricity producer, 1965. You have two more record highs, which is DOMS. This is a recently listed company which was actually in the business of stationery and has now diversified into an unrelated field, which is adult diapers. And of course, Aditya Birla Retail. This is a newly divested arm of the Aditya Birla Group, 6.5% higher, 3038. Amarji, I would love to ask you on angel broking, but I know you won't say a word. But do you have an understanding on Aditya Birla Real Estate Limited? This is a newly demerged arm from one of the listed spaces of Aditya Birla Group. Any view on ABREL?
I would say if you look at ABREL, that's currently around 3,000, if I'm not wrong, somewhere around 3,000, 3,040.
Yes, this same one.
Yeah. So if I look at it, see, this has been I would say, a dream rally for the stock because despite the market correcting, the stock has not corrected. So that really says a lot about the stock and the company. That we've seen almost a 1,500 point correction in the Nifty, but the stock is trading at record high. So that tells me that there is definitely a lot of interest in the stock. And see, what happens is that when a stock witnesses such sort of rally, or for example, if we look at trend, the way the stock has rallied, it becomes very difficult to enter. Because once you miss the bus, you basically wait for a correction. The correction never happens, and it keeps on going and defying all laws of gravity. So that's what we are seeing here as well. Aditya Birla Real Estate. See, real estate is an area, or I would say a sector, which definitely holds a lot of potential and opportunity for those players who are well capitalized, and act very professionally, and at the same time they diversify across cities and across segments. I think there this company holds a lot of potential and opportunity. So maybe from a longer term perspective, one can look at the stock, but at the entry at the current levels, I would definitely be slightly cautious. The stock has got good support coming on the 2600 level. Sustaining above the 3000, 3050 mark, it could rally towards 3200 levels.
Okay. Got it. Well, let's also look at some earnings that are coming in right now as we speak. Zee Entertainment has posted its numbers. Its consolidated profit has improved from 123 crores to 209 crores. That's the first number that we have, and the stock has reacted about 4.5% higher in trade right now. As far as the profit figures go, you can actually see a jump on that front. Let's also look at whether we have the revenue numbers as well. Yes, but that one has seen slight dip from 979 crores down to 902 crores, but there is a spike on the stock, 5% higher, 132 odd levels for Zee Entertainment on the back of the improved profitability figure that's improved substantially. And even I believe the margins have also pulled up as far as the company is concerned. Yes, the margins have come in at 16% versus 13.6%. That's another positive trigger for Zee Entertainment. Amarji, we do know how the stock has struggled under a lot of controversies around Sony merger, several other situations that were occurring. Are the ghosts of the past buried? And can the stock really look afresh on the back of improving fundamentals and the earnings?
See, if you look at Zee Entertainment, again, it's more of the concerns which were there, and them going away. So generally, what we've seen is that whenever there are some concerns with regard to, and serious concerns with regard to any company in any form or shape, that has a lingering effect, like we see in the case of Vodafone Idea, where the stock rallies, and then again the debt issue, or we take the case of Yes Bank, still not able to recover. So Zee Entertainment also, I would say, would have to be looked at from that perspective. Yes, it appears that the stock is forming a bottom, because if I go back in time and look at the recent low of the stock was around 124, 125. That is in October. And if I go back further, so in March of 2020, during the COVID times, the stock had made a low of 114. And from there, it had rallied towards 400 odd levels and then corrected back. So what it tells me is that the stock currently also is in a downtrend. But since the stock has corrected significantly, it's expecting some pullback. And the key question is it able to sustain above that level? So what's the level to watch out for Zee? That would be somewhere around 145, 150. So only above 145, 150, you can say that the stock could witness some sharp rally. This is again one stock which is only for more from a risk perspective, higher risk. Those who have a higher risk appetite, they can look at this stock, because if something positive works out, it could be a multi-bagger. Otherwise, the stock could consolidate, or maybe if it reaches its recent low, it could retest the March 2020 low of 114 as well.
Fair point. 24,871, ladies and gentlemen. Now about 35 minutes of trade is left. Let's hope there is enough momentum in the market to take it beyond 24,900. What is looking good? Okay. Uh, Before you joined us, Sakshi, we've discussed Axis Bank with Amar, and I'd just like to take a view on Zomato with Amar. This surprise but tactically brilliant move to float a QIP before a rival gets listed is something that has caught the market on a back foot. Is it, Amar, or does it make perfect sense to suck out whatever interest that you can ahead of a rival's IPO in your sector and corner that money?
See, I would say that maybe that could help, that could not help, really difficult to say. Because investors also look at both the companies quite differently, though they are they are in the same space, and there is definitely a lot of opportunity for both of these companies. So those who would be interested in looking at the IPO, they would definitely keep a close watch on. And those who want to, because if you look at Zomato has also been a turnaround story. And it definitely has been a wealth creator, because if we look at the way the stock was listed and then it was a wealth destroyer, and then it's gone up by almost, from the lows, it's gone up by more than 5x. So that tells me that there is a lot of interest and hope and expectation from such companies, be it Zomato or be it Swiggy. So the step taken by Zomato of the QIP, that could be good for them. I don't know how much negatively that might impact for Swiggy, but that's something we'll have to watch out for. I would say more we should look at the market sentiments, how the market sentiments are. That would really give a better picture as to how the IPOs will fare in the coming times.
Okay. A lot of other market favorites are now coming back. Hindalco 2.82% higher, 324. You have a nice green uptick on Birla Soft, 597, 0.6% higher. In fact, the dichotomy of the IT index is quite interesting to see. Look at Infosys. It's sulking about 4% lower today, 4.5% lower at 1878. The IT index is down 555 points, and you won't believe that out of these negative 550 points, and then negative 713 points are because of Infosys alone. It's that TCS, Wipro, HCL Tech Mahindra, Infosys, Persistent, all of them are in the green. So they have, managed to balance a bit of the negativity. If Infosys, sort of maybe rises 1% or maybe 2%, then you'll see a dramatic shift in what the change is happening in terms of sentiment. But across the board, look at how Infosys is moving. This is the second day of an uptick after yesterday's numbers. That's a strong show. You have the counter at 3107, and of course from the pharma space, you have the likes of Gland Pharma today making a comeback, 0.5% higher at 1659. The other stocks that are in thick trade are Ambuja Cement, 577, again possibly a swing trade in the making, and that's how I am looking at. There is another company called Samman Capital. Not many people track this, but this is one of those counters that was at 1200 rupees at one point of time, but is now offering perhaps a mouth-watering opportunity to get back into the counter. Yes, if you look at how the prices were, they were at about 20. Let me just get you the right price, but let's get Amar's view in. Amar, a view on Samman Capital, if any?
So if I don't track this, but I'll pull it up and I'll see what best I can do. So if we look at this particular stock from a technical perspective, you rightly said that this again has been a wealth destroyer. and the stock has corrected significantly. Almost, you're right, it had made a high of almost 1300 levels and then corrected all the way towards 90, 80, 82. Currently it's around 144. The trend, if you ask me, is more or less flat, because after the correction, the stock did rally towards 200 odd levels, again has pulled back towards 144 odd levels. Short-term trend is definitely down. And the stock has got good support coming on the 125, 130 zone. So if we don't see a breach below that 125, 130 zone, we could witness some pullback in the stock towards 155, 160 levels. So I would say it's more from a trading perspective. There's no major trend change after the sharp correction, and a major trend change will only happen if the stock, or a major rally will only happen if the stock sustains above the 200 mark. Otherwise, we could witness consolidation in this particular stock as far as Samman Capital is concerned.
Okay. Amar, another thing that I wanted to ask you before we let you go is the outlook on the markets for next week now. We will be absolutely right ahead of the peak festive season. With the recovery that's come in today, what kind of expectations would you have on the Nifty Bank and the markets overall for next week?
I would say that markets, the way the markets have traded today, and that clearly shows that yes, definitely there's buying interest, and we are seeing that across large caps, in terms of banks, in terms of some IT names, and across the board also in mid cap, small cap also we've seen some pullback. So that's a positive, and the advances are also not significantly, but they are decently higher as compared to declines. So that tells me that investors are not very much worried. And India VIX, as I've spoken earlier, also that's also within the range of 13 or so. So there's not much concern despite the sharp correction. So having said that, I would say that going forward next week, we could witness, again, we've witnessed choppy trading sessions. Whether we'll retest at 24,700 low, that's something which we need to keep a close watch on, because 24,700, 24,800, that should act as a short-term support. Upside 25,200, 25,300. On Nifty, that's a level to keep a close watch on. If you ask me, the short-term trend is still very weak. So effectively it means that higher levels could be sold into, but the good part is that we've seen some positive momentum happening in the Bank Nifty. So Bank Nifty is now sustaining of the 52,000 level. If it continues to sustain over the 52,000 level, we could witness some sharp move in Bank Nifty towards 52,600, 52,800 levels, and that would also benefit Nifty. Apart from that, some of the IT names are also doing positive, so that also will have an above effect on Nifty. So the key level is today, this week's low of 24,700 something, and upside 25,200 to 300. That's the zone for Nifty for next week. If 24,700 is breached, then we could witness some sharp selling in Nifty towards 24,300, 24,350 levels.
Well, we will thank you, Amarji, for being with us on this very special edition then and sharing all these wonderful stock ideas. Season's greetings yet again from the entire team of Business Today Television. Till the time we meet you next, hope you have a fantastic time.
Thank you.
All right. And now, viewers, we will now get ready to welcome another guest on the show. We have Mr. Amit Goel, the co-founder and chief global strategist at Pace 360. Joining right in. Warm welcome to you, Amit, and good to have you with us. Season's greetings to you. Do tell us, how are you looking at the market setup right now? We have been seeing difficult last 3 weeks almost, and the entire October of market so far, but are things going to brighten up from here on?
Firstly, thanks for having me on, Sakshi and Shell, and wish you also, both of you, a very, very happy Diwali is of course around the corner. A very happy festive season, and of course to all the viewers as well.
Thank you.
Sakshi, my understanding is that this market is finding a bottom, and we have actually been increasing our holdings in our PMS, which is a multi-asset PMS. We've been buying very, very aggressively for the last 2 weeks, ever since the FII exodus started. And we have bought right throughout the last 2 weeks. And we were effectively in September end, we were at 1% equity exposure on our entire PMS. And I'm happy to inform you that as of now, it is more than 70%. And if the market continues to provide us good entry opportunities over the next few days, we'll probably take it up to even as high as 80 to even 85%.
Okay. A very warm welcome, Amit, and festive greetings from our side. It's always a pleasure listening to your multi-asset strategy. So if you have moved aggressively into Indian equities, what have you exited or partially booked out of?
Fantastic. So, Shell, you would recollect our conversation last time, which was probably, let's say, about a month or maybe a 1.5 months back. And we were, even at that time, we were very, very low on equities. And we were sitting on duration in fixed income, and we were sitting on precious metals. So we have exited our duration bets almost entirely in the last few weeks. And we have also been exiting now over the last few days our investments in precious metals, because now gold has been making new highs and we are contrarians to the core. So last year, October, we had given a massively bullish call on gold. Between then and now, gold prices have gone up by more than 50% in just 1 year's time. And I just do not see how this momentum can sustain. So we've got out of precious metals, we've got out of duration bets, and we are now almost, let's say, about 70, 75% in equities. And this will keep going up in case the market does not go up too fast, too much. Then we'll probably keep buying over the next few days as well.
Okay. That's a wonderful set of timings, Amit, that you've come up with. Yes, just today morning, Sakshi and I were discussing along with a common friend of ours and yours about how gold prices have turned out to be the best asset over the last 1 year. And of course, we are so glad to know that you were in that trade. The other thing I wanted to ask is if the shift is so much towards equity, at a time when a lot of people are sort of getting a little edgy on valuations, what have you purchased? Is it large caps? Is it a combination of smalls and mids? Is it a sectoral allocation? What has caught your fancy?
Fantastic. So, Shell, we have got a combination of large cap, mid cap, and small caps. I would say the bias is definitely towards large and mid. Large would be, let's say, about 75 to 80%. Mid caps would be about, let's say, 15 to 20%. And small caps would be probably just about 5 to 7% of the entire portfolio that we've accumulated. This is one. Secondly, I would want to point out here that it's not that we have bought these stocks for the very long term, because my long-term view remains intact, and which is that Indian markets are still very, very pricey for my comfort. And we are probably in very, very late stages of this macro cycle, which started after GFC, and then more narrowly, it started after COVID. So we are in very, very mature stages. So please do not get me wrong. I'm not bullish on Indian equities for the long term. We had taken a huge bet on Indian equities around first week of August when the yen carry trade reversed. And we had built up huge sizable positions, not to the extent we've done this time. But yes, we'd built up sizable positions, which we got out almost entirely by September end. And this time around as well, my sense is that we are heading into a seasonally bullish period, which is, let's say, October end to about mid of January. This is a seasonally bullish period. And particularly in US presidential election years, this has usually been even more positive than the other such phases in the last 20 years. And plus, I think this FII exodus that happened because of the China factor, geopolitical concerns, and let's say, of course, there are some macroeconomic issues in India as well. For example, there is an earnings slowdown. So there are no two ways about it that there is an earnings growth slowdown. One. Secondly, we are in a cyclically weak period right now where the consumer spending has, particularly the urban consumer spending, has not been shaping up well at all. So there are a lot of concerns around that, which is why there was an FII exodus. They have already sold stocks worth 75,000 crores this month. My sense is that once we get into a seasonally bullish period, which is October end to mid-January, we believe that markets are going to claw back to their all-time highs or near about their all-time highs. And there would be an exit opportunity. And the same people who are running very pessimistic right now, they'll probably turn optimistic again. And we would want to get rid of all our positions, all our investments by January. So this is not for the long haul. This is just for the next few months. And basically, what have we bought? So apart from this combination of large cap and mid caps, what we've done is we've not bought any stock which is at a P ratio more than 30. So barring a very few exceptions, we've bought the beaten down sectors. So we've bought, for example, banking in a very big way, both private and PSU banks. We are very bullish on that space for the next few months. Then we've bought some of the beaten down aeronautics, defense and railway stocks where we were fundamentally comfortable. We've bought a ton of oil marketing companies. We've bought some other PSU stocks which were beaten down. And since yesterday, we've started buying IGL and MGL, which have been absolutely hammered because of this new policy by the government of India that the APM quantities would come down. Today, we've bought Manappuram because we believe that what has happened does not merit a 14-15% cut in Manappuram. So we are contrarians to the core. We are very conscious about the P ratios. We are very conscious about fundamentals and about the macros. And yet we are contrarians. So if we believe that the street is extremely pessimistic on some of these fundamentally good counters where the valuations are not rich, we'll probably go ahead and buy them.
That's an interesting take and a comprehensive one at that you've shared with all our viewers. I also wanted to get a sense from you. How are you looking at the heavyweight sectors like IT and auto and banking? Three sectors that I want you to share with us your view on. You did talk about earnings slowdown that we are already witnessing, lack of spark in the IT space, and muted festive demand in terms of consumer discretionary, like you talked about. Autos is clearly witnessing that, but banks are now taking the lead. How are you looking at these three heavyweight sectors?
Fantastic. So as far as banking is concerned, we are very bullish on banking because we believe that the worst of the downturn in credit deposit ratios is now behind us. And that happened because of two reasons. One, the credit offtakes, the credit growth rates have come down over the last few months, and which is of course not so good for banks. But fact of the matter is that the deposit mobilization has been better than what was there, let's say about a couple of quarters back. So credit deposit ratios are shaping up well. CASAs they have come down, but they are now more or less stabilizing or maybe going up gradually. And the NPA cycle is still a few quarters away. So I believe that there is going to be a fresh NPA cycle. We are not always going to remain at 2% or 3% gross NPA for the banking sector. This is going to go up, but I think we are in a sweet spot right now where the deposit mobilization incrementally is going to be less of a challenge than it was a few months back. Credit growth is still reasonably robust, and the NPAs are probably not going to hit them in a big way. They've already started hitting them, but not in a big way for the next 2 to 3 quarters. So there is a bit of a sweet spot. And given the valuations, I think there's clearly a window of opportunity for the banking sector. Autos, I am not bullish because I do believe that the urban consumer is hurting. And we bought a bit of Tata Motors because that has come down a lot and the valuations were pretty attractive. So except for Tata Motors, we haven't bought the rest of the auto bandwagon. We haven't bought Mahindra or let's say Eicher Motors or Bajaj Auto. I think there were valuation concerns. TVS Motor, we haven't bought any of those. We've just bought a bit of Tata Motors. So we are not bullish on autos as a space. We are underweight and under position in autos. And last but not the least, IT. We are not very positive on IT. I know that many long only equity fund managers, they do try to hide behind pharma, FMCG and IT every time we get a cyclical downturn in the market and also a bit of cyclical downturn in the economy. So these sectors, they often become defensive sectors to buy. But my problem there is that the valuations are still pretty rich. IT space is not looking great to me. I think the EPS growth rate is going to be very, very mediocre, if at all. And they have missed out on this entire AI wave that has happened all over the world in the last 2 years. We've missed out abysmally there. So we haven't upped the ante. So my suspicion is that they will probably remain range bound. I don't see a big rise. I don't see a big fall. So we've not invested in IT, pharma, FMCG, and we've invested a very little amount in autos. But I mentioned to you the sectors that we've bought, and we believe that we are in a sweet spot for the next few months in many of those sectors.
Okay, Amit, I have this feeling that the 75-80,000 crore net sale that foreign institutional investors have made, you've gobbled up most of it.
I hope that were true. I mean, I wish that were true. Not yet, but Shell, we have a great CAGR in our PMS corpuses. So maybe about 10 years down the line, I would have a shot at it. But right now, we are going to be a very, very small player in this entire massive ecosystem. But yes, in terms of percentages, I can tell you that there is no other PMS that I know of in this country who's been as aggressive a buyer in the last 2.5 weeks than we've been.
Yes, and from your conversation, it is two things are very clear. One, you buy extremely good quality stocks available at dirt cheap prices, mainly driven by an event. So that's fairly clear to me. What are the other filters that you have? The names and the descriptions that you've given to us in terms of the purchases that you've made is that there has to be a certain amount of liquidity in the counter below which you would not go. So are there any other parameters that you have which you can share publicly with us?
Sure, Shell. We are absolutely an open book, and I have no problems in sharing anything and everything. So you are absolutely right. Liquidity is an important issue because unlike many of my peers who are stock pickers and who hold on to their investments for many, many years, 3 years, 5 years, 10 years, for them, liquidity is not an issue. But for us, liquidity is an issue because we still believe that we are going to start a bear market very soon. And we do not be stuck with the pricey equities just at the beginning of a US recession or an Indian slowdown or a Indian cyclical downturn in equities. We are absolutely paranoid about that. We've been doing this for the last 25, 28 years, and we'll continue to do this. So this is one. So yes, you're right, liquidity is important. We've got many, many other filters. So of course, we are very, very conscious of the price earning ratios, and you cannot take price earning ratios in isolation. You obviously have to look at a relative picture compared to the growth estimates, and our growth estimates may differ very widely from the market's growth estimates. There are instances where we believe that market is too rosy. Market is predicting a very rosy outcome in earnings, which is my problem with some of the counters like Trent and Dixon and many, many others, where the price earning ratios are so high because market is thinking that they would grow their earnings at a CAGR of some 30-40% for the next 5 to 6 years. I'm not there. So we would not buy anything where the intersection between the valuations and growth is unfavorable. So we want a very, very favorable intersection between value and growth. Then, of course, you are absolutely right. We are a little event driven in the sense that we are always looking for opportunities where a particular stock or a sector is hammered way beyond what the fundamentals would actually deserve. And which is often the case, because this is a very highly levered market. So a lot of people are sitting on tons and tons of leverage. So every time a stock goes into a downturn, it does exaggerate on the downside because people have to cut their positions, and they have to, the usual that we have all witnessed over the last many decades. So valuations is a concern, liquidity is a concern. Then the growth projections, how our growth projections differ from the market. I can buy a share at a 35p ratio if I believe that my projections are way higher than what the market is, and I believe that the stock is going to justify the valuation. So I would not have any reservations buying a 35 or a 40p ratio stock. But of course, it has to then muster, and it has to pass through many more filters for us to be able to buy them. So these are some of the more important factors. Then, of course, we are conscious about MCAP. We are conscious about the shareholdings. We do not like stocks where the promoter holding is too high. And we also do not like the stocks where the promoter holding is too low. So, we look at the shareholding patterns. We look at top line CAGR, bottom line CAGR, valuations, EPS growth, markets estimates. If there is an event, then liquidity. So a whole lot of factors. And then, of course, on top of it, we never forget about the global macros. For us, global macros is what determines our asset allocation. So if we are not bullish on the markets, if we are bearish on the macros vis-a-vis the valuations or the levels, we'll probably not buy it all.
I mean, if you could highlight for us, which is the stock in your portfolio which has the lowest market cap? And could you also share with us what is the minimum public float that you really buy as a percentage of the outstanding equity?
Fantastic. So I can share with you, let's say, one name. So Chennai Petro is one stock which has come down a lot from its highs, and we just saw a window of opportunity, because while I agree that the refining margins all over the world are pretty low at the moment, which is where Reliance is hurting, and a lot of capacities have come up in Asia and of course China. But my sense is that given the valuations and given the fact that very soon seasonally there is going to be a pickup in the refining margins over the next 3 to 6 months, so we thought that there was a sweet spot. So this is one of the lower MCAP stocks that we've bought. But yes, by and large, as I mentioned, we have a very low weightage towards stocks which have an MCAP of less than 15,000 crores. It's literally in mid-single digits.
Okay.
And how about the public float? Public float as a percentage of outstanding equity, that would determine, of course, the size of your transaction into that stock.
We do look at public float very carefully. I have a problem in buying stocks where the public float is, and we look at public float slightly differently from what the numbers or the websites would suggest, because we genuinely try and get to the bottom as to what kind of stock is actually being traded in the market, because often there are some investors who are sitting on big positions. They are part of the public float, but we know that they are pretty much committed for the long haul, and their stock is not going to come in the market. And what happened in Hindustan Zinc, for example, some time back, right? They announced an OFS, and that the stock tanked because suddenly the market realized that this is a pretty high valuation stock, and now you are going to have a lot more floating stock in the market than you had till now, and the stock tanked like almost 15%. It is one of the only metal stocks which is still down by about 20% from its just recent about 2-month old levels, right? While the other commodity and metal stocks are doing reasonably well. So yes, we are very conscious about it, but it's not, our bets are not that large that we need to exactly make it an equation that, look, the percentage that I would pick up or the amount that I'm going to invest in is going to be a function of the public float. But yes, we do look at it very seriously. We do not like situations where suddenly an OFS would be announced or a QIP would be announced and the market realizes that the floating stock has gone up too much. Look at what happened in DB Realty a few months back. They announced a very large QIP, and the stock has never gone back to those levels. So we are very very conscious of this, but it's of course it's like one of the 10 or 12 criteria that we would look at before buying a stock and before deciding the quantities.
Okay.
Okay. Amit, my final question to you on this mad rush for preferentials that we are seeing. In the last 9 months, there has been, I believe, about 77 to 90 preferentials, about 80,000 crores have been raised in the secondary markets. Is this an area where you hunt in, or this is where you stay away assiduously because valuations there are already sky high?
Yes, so Shell, there is a pattern there. You would see that the maximum number of OFSs, strategic stake sales, preferentials, and QIPs, they are coming in pricey stocks. You would not see them happening to a stock which is trading at a 15 or a 20p multiple. Usually, by default, most of them would be in that plus 40 or plus 50 kind of valuations, which in any case we are usually very skeptical of. So this is one. And plus, of course, that same argument about the floating stock, that is also true, that if we believe that suddenly the floating stock is going to go up by like a 10% or a 20%, then we know that we would rather want the floating stock to be absorbed in the market before we actually want to invest in that company. And last but not the least, on a macro basis, I am very, very concerned about all this rush of strategic stake sales by promoters, by MNC promoters, by strategic investors, by PE investors, and dilution in the form of QIPs, OFSs, follow-on public offers. I am very, very, very concerned about this. And in my opinion, this effectively has capped the upside in this market, because as long as the market is bullish, these guys would keep coming up with this, which would mean that all this money which is floating, which is coming into the market through mutual funds, SIPs, insurance, pension funds, a lot of is being diverted towards all these different instruments. So this caps the ultimate upside in the market. I'm very concerned about it. It is one of the reasons why we are not long-term bullish on the market. But that does not mean that we do not see a window of opportunity over the next 2 to 3 months. And if we see a window of opportunity, then we can scale up our bets like we've done in the last 2 to 3 weeks.
All right. Then last word from you, Mr. Goyal, and I want to understand from you on the trends of IPOs that we are seeing on the D Street, especially the biggest ever IPO that we have just seen conclude, Hyundai IPO. How did you assess this opportunity for investors and your own clients? And how are you looking at some more IPOs that are going to be coming in, the likes of Waaree Energies, for instance, from the renewable energy space? Anything that interests you from the IPO pack?
Actually, Waaree Energy is something which we are looking at very closely, and in fact, we would probably IPO we would want some action there. But Hyundai is something that we completely steered clear of, because I would rather buy a Tata Motors at a single-digit valuation than I would rather than buying an IPO on Hyundai. And I think the response has also been pretty lukewarm. And though I don't have a doubt that it is going to list at some premium over the IPO price, but it is not attractive for me at all. So we are not looking at. We did not invest in Hyundai. We are not looking at Swiggy. We are also not looking at many of the other IPOs which are coming at obnoxious valuations, or they are coming from loss-making entities. But Waaree Energy is something which is of interest, and we are definitely going to participate there.
With that, Amit, it's been a wonderful 35 minutes listening to your, how should I say, buying thesis, and it's been wonderful. Thank you so much for your time. And Sakshi and I, are you still at Safdarjung Enclave, if I'm not wrong? Last time
Yes.
I visited your office, it was near
Yes.
Safdarjung, right?
I sit at Safdarjung office. Our head office is in Oakland.
So
I'm still
both
at-
Sakshi and I are...
Yes.
Okay. So Sakshi and I are coming. Keep a hot cup of coffee ready and we'll learn more from you.
It would be my privilege and pleasure. Thank you, guys.
Thank you so much.
Okay. Yours, Sakshi.
Okay, so there we have it. The day has ended on a high note. Thankfully so. We've improved considerably from where the opening was. Remember, the pre-opening trades were indicative of even 200 points of a cut, and we've ended 113 points higher. 24,850s with the bulls today. 24,863 is where we end at, nearly half odd % higher. We saw the second half considerably improve for the markets. This was largely led by the banking names, especially the private banks. The index itself is 2% higher. The Nifty bank is up by 1.7%, 850 points higher nearly. At 52,000 is back with the Nifty bank, 52,136. Private banks, financial services, PSU banks, all three of them constituted to these gains on the Nifty bank. Beyond this, we saw the metals shine bright today, over % gains. We did see the media stocks largely led by Z Entertainment after the earnings that's pulled up. We saw the auto stocks recover, 0.6% higher. Pharma participated, consumer durables and the real estate stocks as well, and the broader markets are also into the green. What still fell flat on the ground was oil and gas, FMCG and IT sector was the top loser today with 1.4% kind of losses that we did see. India VIX slipped, and that's a bit of a relief, 3.2% lower at 12.9 odd levels for India VIX today. Top movers on the Nifty, Axis Bank, Wipro, Eicher Motors, ICICI Bank and Shriram Finance. Top losers, as the top drags have been, Infi down 4.5% post earnings, Asian Paints, Britannia, Nestle, HUL and Tech Mahindra were the top losers on the Nifty index. But definitely we have improved for the better, 104 points higher, and the screen is frozen in front of you at 24,854. We'll see whether this buoyant move continues for the better in the next week as well. With that, we wrap up this special trading session. And many thanks viewers for being with us, and hope you have a fantastic weekend ahead. We'll be meeting you soon after on Monday morning with new week of market trade. Thank you so much for being with us.
और मैं कांग्रेस बिजनेस टुडे टेलीविजन